Hey guys, Tony Denaro here. Welcome back to the channel. Yesterday, February 28th, we got the Q4 and full 2022 earnings summary for AMC, and I want to share with you a couple of my unique thoughts and perspective on the company, on the performance. Don't worry, I'm not going to bore you by sitting here for 20 minutes reading through all the financial statements. I'm pretty sure by now that all of you have already gotten that from other channels. So in this video, I want to talk about my unique perspectives, things we talk about on this channel that nobody else does, and answer some of your more common questions like, why is the company breaching fiduciary duty and being sued for trying to do a reverse split and raise more money? Where did all that $2 billion go? Why isn't Adam Aron doing a better job? Let's talk about some of those very good questions referencing the material that was released yesterday, and also talk about the price action of AMC in the past few days. Regarding the price action of AMC over the last week or so, AMC had been trading in the range of $6.25. I showed you on Monday evening, based on a court decision at 11:30 a.m. Eastern Time on Monday, why AMC started moving up and APE started moving down at exactly the moment that filing was made public. The stock ran up on that news very quickly, catching smaller retail shorts, people who had been shorting it close to the current price, unaware. And guys, this was not big institutions covering. This was small retail shorts that don't have deep pockets to absorb a run-up of $1 or $1.25. Please don't misunderstand what I said on Monday. This was not big institutions covering. This was smaller retail shorts based on the pattern that I see here in that tall wick up. These would be people like you and me, or people on YouTube that don't like AMC and want to short it at $6, $7, $8. They got blown out here, but once that buying pressure from the forced short covering was over, then you can see that the price and the volume started coming back down. What happened after that? On Tuesday, the 28th, that was going to be earnings day. You can see right here that the trading was relatively flat that day, while the street waited to hear what AMC had to say after hours. Then the news came out and the stock went down in after hours, and we had a gap down this morning. And based on absorbing those earnings overnight and what it all meant, the stock traded pretty much flat today in the $6.50 to $6.60 range. Over the last 24 hours, I've seen a lot of your questions. You're wondering, why is it trading down? Didn't AMC blow out the earnings? What is the difference between GAAP earnings per share and adjusted earnings per share? What was the real earnings per share on the performance of AMC? And what about all those other questions that I talked about at the beginning of the video? Let's get right into that information. In my Q4 estimate video, I talked with you guys about how Q4 was going to be somewhat so-so because the domestic box office in Q4 was lower than Q3, and it was lower than Q4 a year ago. And during the conference call when Adam Aron and the executives were speaking, I told you that the focus was likely going to be on giving you the most positive story going forward, and they delivered on that. And the news going forward is good. Let's dive a little bit deeper. Now, I promised I'm not going to sit here and read all of this to you, but I just want to talk to a couple of points here to explain to you the price action after hours and what you saw today, Wednesday, March 1st. But when we look specifically at Q4, we see that Q4 had some weakness, and that is probably what the market was focusing on. Total revenues were $990 million compared to $1.17 billion a year ago, and net loss increased for Q4 to $287 million compared to a year ago of only a net loss of $134 million. The other thing that the street is going to look at is the loss per share, and for AMC it was negative 26 cents for Q4 2022 as compared to negative 13 cents for the same quarter a year ago. Now, I know a lot of you saw a headline saying that the earnings per share was negative 14 cents, and so I just want to take a brief moment to talk about the difference between GAAP earnings per share and adjusted earnings per share. GAAP, GAAP being generally accepted accounting principles. That is what is actually filed with the SEC. That is how you calculate earnings per share according to established accounting rules. That number was negative 26 cents per share. Now, companies do have another way that they can calculate it, which they often show to the retail public, and that is called adjusted EPS, or sometimes core EPS. The reason that I don't use those numbers is basically the companies are able to create their own version of earnings per share, and it is not always defined the same between similar companies in the same industry. So Cinemark might have one way to define adjusted earnings per share, and AMC could define it a different way. Since these are not similar, I don't use it in my own analysis, but we will talk about it again briefly as we get into the next slides. It's still good info to know, but the real earnings per share was minus 26 cents. The great news for the entire year, 2022, attendance was up almost 100%, 200,965,000 patrons in 2022 versus 128 million in 2021. But in determining what price action was happening after hours as well as today, the street was probably more focused on the specific Q4 results, and those were down from Q4 a year ago. 49,500,000 for AMC in Q4 of 2022 versus 59,683,000 in the same period a year ago. I told you at the beginning of this video I'd be spending a couple minutes talking about what is management of AMC doing to improve the financial performance of the company. And often I get asked, why aren't AMC closing more theaters? If you look at the lower table on this screen, you can see that the vast majority of theaters that AMC operates are leased, 824 leased versus only 41 owned. And if you have not ever had a commercial lease, you probably know you can't just close a lease. If you do that, the landlord is going to accelerate the lease and charge you for whatever is left on that lease. So as leases finish up over the past 2 or 3 years, if they were an underperforming location, AMC has been closing those locations. We can see that in the upper table far to the right where it says permanent, temporary closures and openings. They've also been doing a few strategic new builds and acquisitions in high prime areas. Since 2019, we can see in this upper table that the number of theaters that AMC operates has indeed been reduced through this pruning of unperforming locations. It's dropped from 1,004 to 940, so 64 total closures if you factor in all the ones they closed plus the new strategic acquisitions. The company is actively identifying still underperforming locations, ones which maybe are older and don't justify a renovation cost to bring them fully up to AMC's new standards. And I expect over the next couple of years, as more leases finish up their term, that we will see more non-performing locations closed down strategically. That is good management. The other complaint that I hear a lot is, why isn't he doing more to generate more income? Please, guys, you got to understand that a movie company is a little bit held hostage to the number of movies released by Hollywood. There's only so much Adam Aaron can do to generate new income when the number of movies that are being released in 2022 are still almost half of what they were in 2018 and 2019. We will get there again in 2023, 2024, maybe 2025, all the way back up to the full Hollywood production schedule where they were at in 2018 or 2019. But there's only so much that a CEO of a movie theater company can do to generate income when the source of his income is coming from another party. But as you probably know by now, Adam Aaron and the executives have been identifying some potential new revenue streams. We will have to see this year what or how much actual income they bring in. And that includes both the AMC credit card and microwave and ready-to-eat popcorn, initially going to be distributed starting in April at Walmart, and then a wider distribution once they get some confidence in their sales. This is not a company just sitting back saying, woe is me, we're not going to do anything other than wait on Hollywood. Guys, they are actively doing things to generate some new revenue streams. And I think it's worth mentioning that. And again, giving them kudos for being good stewards of the company and actively pursuing new revenue streams. Going back to the GAAP versus adjusted earnings per share, I'm not going to read this entire table to you, but if you read at the top on the left-hand column where it says loss per share, basic and diluted, negative 26 cents, and then down lower, adjusted diluted loss per share, negative 14 cents. I do want to just take a second to show you exactly how that is calculated. When we look at the income statement, there is this one-time Q4 line item, an expense right here in the middle called impairment of long-lived assets. That was an expense in Q4 only of $133 million. At the bottom, you can see the total loss for the quarter, $287 million. If you subtract out the impairment of long-lived assets, so 287 minus 133, that gives us $154 million, and then divide that by the number of shares, that is how you get to the 14 cents. So net loss, remove the impairment. Why did they do that? Because that was a Q4 only expense. And if you want to compare Q3 to Q4, you remove that, get an adjusted earnings, and then we can more accurately compare Q3 at AMC to Q4 at AMC. Moving into cash and why the company needs to continue to raise money, they did report to us that in Q4 there was a positive operating cash generated of $57.5 million. But if we look at the summary for the entire year, there were negatives on cash flow from operating, investing, and financing activities, yielding a net decrease in cash for the year of $965 million. For those of you that keep on asking, where did $1.8 billion go since June of 2021? The answer is as simple as looking at the income statement. Every question that you have is answered right here, where every single dollar is going. Right here in the middle, you have all of the operating costs, film exhibition costs, food and beverage costs, rent, general and administrative, depreciation and amortization. Down lower, you have the other expenses, including interest expense, finance, lease obligations, etc. Every dollar that the company is spending is on the income statement. If you're wondering where the money went, you need to spend a little bit of time learning to read some financial statements. The company is losing in Q4 $287 million, and on average every quarter it's been about $225 million loss to keep the doors open, because the company does not have enough movies yet from Hollywood to drive the foot traffic and butts in seats to get positive on operating expense. The other thing the company has is that $5 billion in debt and the interest payments on that. And now we're going to talk about what management has done in the last year on behalf of you to improve that balance sheet and improve that capitalization structure. On the balance sheet, I do want to point out at the top that the cash on hand at the end of 2021 was just shy of $1.6 billion. We ended 2022 with $631 million in cash, and there were key improvements in corporate borrowings, other long-term liabilities, and capital and financing lease obligations. You can see the decrease in each of those from here in 2021 to 2022. The finance guys at AMC were doing their job to reduce these on the balance sheet. The other thing related to that the finance guys were working on was reducing money that the company is spending on interest by reducing that debt. $82 million reduction for the year, from $388 million in 2021 down to $305 million in 2022. And as more work is done in the upcoming years to reduce the debt, you'll see that money being spent, wasted on interest payments, will continue to go down every year. One other interesting footnote from the balance sheet that I always like to point out is related to gift cards. When you buy gift cards, that does not generate immediate income for the company. It goes into a liability account. There is a footnote you can find in the 10K or in the 10Qs if you search for it. I put it up on the screen here for you. Guys, there is $315 million of gift cards waiting for you, friends, and family to use. And as soon as you use them, the company can book the income. So use those gift cards and let's get them into the income statement of AMC and off of a liability account on the balance sheet. Where else was the company spending all that money they had? Well, there were a lot of lease payments from 2020 when the entire industry was shut down that got deferred. And there was a balance at the end of 2021 of almost $300 million in deferred lease payments. There was a reduction in that. Money was spent to pay off that deferred rent, $149 million worth. That leaves us only $150 million to take care of in 2023. That will be some more of your money spent to get that deferred lease payments off of that balance sheet. I'm going to close this video with one more footnote from the balance sheet talking about the debt. First of all, you can see all of it right here. You can see the reduction from 2021 of $5.4 billion down to $5.1 billion. Yes, the company was paying off debt and restructuring. You can also see that there is no convertible debt on AMC's balance sheet. I often hear people accuse AMC of having convertible debt. That is not the case. And in the bottom table, you can see that the bulk of the principal is going to be due in 2026, although I would expect that if it's not paid off before then, that the company will do another restructuring as we get closer to 2026 and push that debt out a little bit further. And by restructuring, I mean a restructuring of the debt, dealing with lenders, coming up with a new deal to push it further out. So in wrapping up this video, we talked about Hollywood not releasing yet the number of movies that they were in 2018 or 2019. We heard Adam Aron on the conference call saying that he's not expecting that that will be back at full movie release capacity probably until 2024, maybe 2025. Recognizing that, it is fair to assume that the company is probably going to continue a cash burn, which is currently around $225 million per quarter for the foreseeable future. And it is critical for the company to be able to raise enough cash efficiently to see itself through until we get back into a full production schedule from Hollywood hitting the theaters globally. There is an upcoming vote, you're probably aware, on March 14th at 11 a.m. I will be covering that live. You must have your vote submitted by 11:59 p.m. on March 13th for them to be counted. And however you're deciding to vote, yes, no, or abstain, I urge you to please make your voice heard. Don't be lazy. Get those votes in. Your vote is a choice to decide how AMC continues to raise capital. A no vote is going to force them to raise capital inefficiently via APE, unless the judge just says you can't even use APE anymore, Adam Aron. And then he'll have to come up with another plan, probably create some new preferred share and sell that directly to some institutions. That's something to think about. Do you want more of your company sold to institutions via some special preferred share that they could convert later to common stock? That is something that could happen. The other option is you could vote yes and allow the company to do the reverse split, the conversion of APE to AMC, and at a higher price, be able to sell more stock efficiently. At the end of the day, guys, it's up to you. I'm not here to tell you how to vote. There's going to be dilution either way, no vote or yes vote. Your ownership in the company is going to be diluted. And make no mistake, when APE is sold to institutions, that is diluting you, even if you only hold AMC. It is diluting you both on the income statement, where earnings per share is calculated, and it is diluting each and every one of your votes. Just a couple of things to think about. Please get your votes in. I am Tony Denaro. I want to thank you for watching. Please like the video if you got some value out of this. Don't forget to buy and hold that subscribe button if this is your first time here. Thank you for watching, and I will see you on the next video.